Hello, YouTube. Is the trap set where we're now going to get more pain for the NASDAQ, more pain for the S&P, and for the stock market? Why? Well, because we're looking here at these key relative highs from just over a year ago, going back to February, March, and April of last year, and we actually breached them by getting above 372. And the reason why there could be more pain ahead is because Jerome Powell was the cause of pain for these bears on Wednesday, and he's going to be giving it 2 days of full testimony. First on Wednesday, and then on Thursday. And because we have a holiday money for Juneteenth, happy Juneteenth ahead of time, I think that Jerome Powell is going to have a chance to either confirm what he mentioned on Wednesday or to contradict what he mentioned on Wednesday. And this will be very important for me because when he's getting grilled, it's usually by the House and by the Senate committees, which means that he's not going to be getting softball questions like he got from Nikki Leaks over at the Wall Street Journal during the Q&A. These are going to be people who are trying to make Jerome look bad. So how is he going to bounce that? Is he going to be calm, cool, collected? Is he going to be telling us something different? And in regards to the headline that we put in the thumbnail today, we're going to update you on this big short and how, like in 2015, they initiate the big short, they capitulate, they double down, and then they go to net positive. Same thing happened in 2020. Big short gets put on, they capitulate, they double down, goes to positive. Now we look here to 2022. There's the big short, there's the capitulation, right? There's the doubling down, and now maybe they're going to cover, but they're not covering by very much. 344 to 331 this week, which means that extreme greed for the bulls means extreme pain for the bears. And if we look here to the timeline, the other reason why I think we might be entering a danger zone is just because we're now at an area where, if this thing would finally update, there we go. Going back to that chart we just looked at on QQQ, we're at 82 on February 1st of 2023. And now looking forward to where we are now, we're at 82, which means we're seeing that exact same level of greed, which led to the reversal. And as of right now, we've ground all the way up here. It's more of a grind and then a pop versus it just being a straight line higher like before. So if now we go back to look at the charts here, I want you to pay attention for a couple of minutes. So please bear with me. We're going to look at a few different charts right now, but I'm going to ask you for a huge favor first. If you could please consider smashing that thumbs up and subscribing to the channel, I would greatly appreciate that. We put out videos every single day, and we would look forward to having you in our YouTube community. So with these relative highs right here, I think that people might be wondering whether or not there's more juice in the tank. And right now, well over our monthly high. And with weekly moves, I think that the price is going to keep driving us here for the next little bit. So pay attention to a few things here. We're going to start with QQQ, where we talked about the turning point, and that's when we were at 290. Well, we're like a lot higher than 290 now. So we're almost 100 points higher. At the high, we're at 370. And the turning point was something not a lot of people wanted to believe. And now that people are believing it, man, they're really piling in. So here's the part I want you to pay attention to. We've talked about the turning point. We blew through all the resistance zones. But watch this simple pattern right here. Below the 50, back over the 50, and then just slingshot higher. Why is that important? Well, because we're not at all-time highs yet. We're battling for key resistance. But look at this other chart over here, the DAX. What happened? Below the 50, over, back test, punch up. There's the back test of the relative high and the bounce. There's the push. There's the back test of the relative high and the bounce, and then we go to all-time highs. And we get pretty close to a death cross here, but don't quite actually hit it. And why does this matter? Look, DAX is at all-time highs right now. It's at a record close on a weekly perspective, new all-time highs. Well, why can't QQQ go to new all-time highs? Why? Well, because right now it's not. And the S&P could go where? Well, maybe it's going to go to all-time highs. That's the bullish story we're going to bring to you this weekend. So let's go back to let me just see what board I'm on here. All right, we're on weekly charts here. So looking at QQQ, the part that I find a little bit interesting here, if we, let me just make sure I'm on the right board, because there's a couple of charts I really want to pay attention to this week because I'm trying to find a simple story. So let's go to QQQ. What we note here is after we get over that 50 MA, we just punch, we go sideways, and then just the melt higher. So the DAX does not have that template, right? We get a big cut, get a big cut, get a big cut. And every single time we backtest those previous tops, but we bounce. So is QQQ or the S&P going to track the DAX, or is there another market we can look at to try to understand this current pattern? Why? Let's look here to the Nikkei, which is actually Japan. And you might be very surprised because the Nikkei, as of right now, is up by 29.2%. Whoa, that's right. Blowing through these previous tops here, but not at an all-time high that we saw during the 1990s. Let's go back to our 1-week chart now to see if we can understand what is happening to the NASDAQ. So it battles here for the 50 MA for a number of years, right? 2 years or so. Gets below, back above. There's the back test. There's the slingshot higher. And it's been pretty much a straight line up. Very few periods where we're actually pausing. It's pretty much a vertical line up. So that looks a lot more similar to what QQQ is doing here. Let's delete everything again. Over the 50, back test the 50, and then pretty much straight up. And why does that matter? Again, let's go back to the Nikkei chart. And I know I'm bouncing around, so just hang with me for a few moments, please. There's the tops. What happens? Punches over it and then just continues higher. There is a template for us to do this. The other thing I would note is that this also signifies that it is not just a US rally story. There is America. There is Europe, which is the DAX. There's also Asia, which is going to be the Nikkei. But let's think about the rest of the world, because if we're going to be going into a global risk on potential move or a blow off top, right? A euphoric rally, whatever you want to call it, are these other charts exhibiting those same warning signs? Here's EEM, or emerging markets, which is a large basket of basically emerging countries. Over the 50, back test the 50, back above, it's starting to push off. So emerging markets are starting to push off that 50 MA, which means emerging markets might be starting to join the party. Then we look over here to FXI, and their economy is not super strong. They've announced new fresh stimulus, but that same pattern here. Over the 50, battle with it for a little bit, just like in Asia with the Nikkei, and now actually closing back over it. Is it going to start going higher? They're expected to announce more stimulus. So I want you to pay attention to what we just laid out, because as we're looking here at the S&P, I think a lot of people are befuddled, right? They're bewildered, they're unsure, they're confused, they don't know what's happening. The S&P had a bit more of a back test here, and then it went higher, not like the NASDAQ. So I want you to think about this. If the Nikkei, which in my opinion is a terrible economy compared to America, Europe going into recession with interest rates just starting to rise, but they're at all-time highs. Is America able to join the party? Is America still the best? Is there the AI boom happening in America? I think so, which for me means that there could be more upside. But we cannot ignore that if Jerome changes his tune, we're likely going to hear that in June. Otherwise, there's going to be some other Fed chirpers this week. I know we got John Williams, who's from the New York Fed. That'll be very important. We also have James Bullard, St. Louis Fed, very important commentary. But I think it's really about the big man, Jerome. And if we get through this, the next time we hear from him is going to be in some time from now. And I want you to think about what is going to happen if Jerome doesn't say anything new. And then between now and July 25, 26, or roughly 6 more weeks, what could we do? Well, I think the more painful trade is going up. Another trade which could be equally painful is just going sideways. Going sideways over in bull market territory is going to mean that the people who want to buy that dip, like we saw on the DAX, and again, let's look at that chart to understand it. The people who want to buy this dip, well, maybe they don't get it, which means there's cash on the sidelines who want to buy, but they're not going to get a price at which they're willing to bite the bullet. And on the second note, if we go back here to the S&P, by not going lower, it's also very painful for those shorts because there is cash that wants to get out. They've been short ever since the first rate hike that Jerome did, and now we're actually higher. So the market rallied 20% off the lows, and they're red. That is not a good position to go into. And I want you to think about this as we're going into next week and then beyond. So if we think about window dressing, which we talked about on the Friday stream, it comes down to the report card. And the report card means what have you done for me lately? We looked at this chart here for S&P on the 1 month. And after we, let's just make sure we go back in time for a moment here to try to understand where we're at. So is America still the best? Please make sure to drop me a comment and tell me what you think. Are you betting that America is going to continue to be good, or are they going to be bad? And at the same time, if you wouldn't mind, please consider smashing that thumbs up and subscribing to the channel. I would greatly appreciate that. I know we ask you to smash the thumb and subscribe often on these videos, and I want to give you a big thank you ahead of time. So I want to give you a big thank you just because if you're watching that video, we really appreciate that. But if you're watching and you hit the like button, what you're literally telling YouTube is, please go tell more people I'm watching this, but I also like it. So thank you ahead of time. So as we noted, after we broke out on the S&P, we're actually going up, and most of the wicks are mostly lower, which means dip buying. And now that we've broken out, we want to make sure we understand one higher time frame, which is going to be the quarterly chart. And why does a quarterly chart matter? We went through this on the Friday stream, so please go back and watch that. We'll leave it at the end if you want to. But we've had 1, 2, 3 in a row, which are looking pretty constructive. And we're noticing that these are actually 3 white soldiers. We're also noticing that on the 1 month chart where we have 3 white soldiers, right? 1, 2, 3 inside of here, actually 4, which means we're starting to actually look a lot more constructive. Let me go back here, just make sure I don't lose my lines. There we go. And the reason why this quarterly chart matters, it just looks at the last 3 months, because right now in the last 3 months, or from April until now, we're up by 7.35%. If we look at a 12-month chart, the S&P is up by 14.9%, basically 15%. Why does this matter, Justin? It matters because hedge funds, mutual funds, right? Money managers, blah, blah, blah. All these guys, they get the report card 4 times a year, or when? Once every quarter. So at the end of June, they're going to receive the report card. Did you beat the market? Did you do better than 7.35%? Why? Because they take fees to manage your money, which means you're actually going to make a little bit less. You're supposed to be paying for performance. You're supposed to be paying for them to beat the market. So if they fail to, that's what might be fueling part of this move. They're being forced to buy into something they don't really want to because they need to deliver those returns. So tell me why this matters. Well, it matters because other than Jerome speaking this week, we got initial jobless claims. That will be important. But I think that the report card is going to be what really matters here. So window dressing means people want to pretend they've been owning the stocks which have worked in the last quarter. Like what? Like Tesla, like Nvidia, like Microsoft, like Google, like Apple, like Amazon. So why do these companies matter? Well, let's look at another chart now. Let's go over here to Apple. Actually, let's look at Nvidia first, because this is the one that actually went to new all-time high territory first. There we go, weekly chart for Nvidia. So we know we're at a record close here for Nvidia on a weekly close, but it joined that party on a daily time frame first. So on a 12-month chart, we can clearly see it's made a higher high and it's blown over. So Nvidia was first to join the party, and then Apple joined next. Apple, after its VR, it's actually here above its all-time highs on a record close, intraday, daily close, weekly close, record territory, just like the DAX, and just like we're seeing over in, the DAX, like we are trying to see, which can form into QQQ. And then when we look to Microsoft, Microsoft actually also joined that party. Not on a weekly close, but on a daily close. So if we look back here to the daily, on Thursday, we formed a record closing basis on Microsoft. So what does this mean? We're seeing a lot of the signs that we are seeing performance chasing. We're seeing people window dress. And I want to know whether or not that continues into the month of July, which means there might be more pain for this last week, which would be sideways to up, depending on what Jerome Powell has to say. But in the last 3 months, like, the market doesn't look all that bad. There's some pockets of red, individual names, but the broad theme is mostly up. So what that also tells me is that there is some legs to this rally if that is where we're going to be going short term. The saying is that the market can remain irrational longer than you can remain solvent. And yes, absolutely. The market is probably a little bit irrational right now. Doesn't mean it can't go higher. If we look here to RSP, last week, we saw record inflows of $1 billion. This is equal weight S&P 500. And just ask yourself whether you didn't know this was the S&P, it's just a normal chart. Do you see that same pattern we looked at before? We're dancing around the 50 MA here. Volume starts ramping up. And then what happens? Well, we're pushing back over that 50, which means equal weight S&P 500 looks a lot like emerging markets and a lot like China. Okay, cool. Now let's look at over another chart here. Why? Well, because we want to understand if we actually know what's happening here. Let's look at the Dow. All right, the Dow, right? Same thing. Over the 50, back below, back tested once, pushing off again. Oh man, it's like there's a clear theme happening here. Absolutely. Let's look at the Russell. And this is something that I need to see happen, not want. I need to see the Russell actually push off here, right now, without looking back, for me to believe this rally has more room to advance. And then one final chart here that we're going to look at is going to be ARC. And this is because it's doing the same thing. I know this seems so simple, but a lot of these charts are all doing the same thing. We test the 50 MA here, we back off, and now we're pushing over. Pretty nice rally since we pushed off our recent lows there too. So ARC is also joining the party, which means people are going further out the risk spectrum and buying things that are generally going to be considered a little bit riskier. All right, now we're going to look at a 1 month chart for a few more because there is even more similarities than you might think. As we're going into the end of the month, I want to think about position so 13F filings that we talked about, window dressing. I also want to think about monthly candle closes. I also want to think about that quarterly chart. So as we're looking forward here to the DAX, note the same thing. It's the 50 MA. It's the blue line. Crash line on the 50 MA, bounce, new all-time highs. Okay, cool. Let's go to the Nikkei now before we look at America. Nikkei. Okay, over the 50, back test the 50, doesn't break it. Boom, new 52 and multi-decade highs. We have to go back to 1989 to see levels like this on the Nikkei. So what does that mean? Hey, back test support and bounce. That's what it tells me. On high time frame charts, like the weekly and monthly, we have both the DAX, which is going to be the strongest economy in Europe, and Japan, which is the strongest economy in Asia, excluding China. China's going to kind of consider its own thing. They're all showing the same pattern here. All right, let's look at QQQ or the NASDAQ. QQQ. All right, let's delete. Oh, man, it's like the same, right? There's our all-time high, hit the 50, bounce. Now we're digesting those relative highs. If we get over it, it's probably going to want to melt to 380s, if not back up to those all-time highs. So similar pattern here. All right, S&P. Let's round it out, Dustin, see if this pattern is very similar here. Oh, man, from all-time highs in 2022, boom, hit the 50, boom, there's the bounce, TBD, or to be determined if we're actually going to make it up to those highs. All right, so tie it all together for me. You told me Jerome Powell speaks this week. Tell me what I need to know for this next week here, though. All right, so on QQQ, we're looking at those February, March, and April highs. And that's where S&P needs to get to if we're going to leg up and go to all-time highs. So right now, what we need to see, not want, need to see, is we need to see QQQ actually push back over these highs and hold it. Basically, we have to get to the 70% Fibonacci retracement, which is currently at, let me just find that number here because it's a little bit hidden, 375.66. So we got to make it to 375.66 or what? Form another weekly higher high. So let's go to the weekly chart to see what that looks like here. So if Jerome Powell speaks on Wednesday, but we only have one session before, here's what I want to see from the bulls and from the bears. From Team Bull, I want to see a weekly higher high, and I want to see us close over it, which would mean what? I'm basically looking for a tag of that Fibonacci level at 375 and for us to hold 373 on a weekly close if the expansion is going to continue, meaning we're going for a fresh leg higher and not looking for sideways action. From Team Bear, it's pretty simple for me this week. Let's go to S&P to make it a little bit more obvious too. There's two scenarios. Scenario one is that we push higher into the first half of the week. We form that weekly higher high. The only way that would be bullish is if we also lose that high and at least close red on the week. If we're able to turn into a bearish engulfing, that would look something similar to like what we had here. Inside bar, right? We see those nice upper wicks, inside bar. There's the lower low on the next week, though. Lower high, lower low. Then we get the corrective wave. Unless we get that, we're not going to go down. We need to see lower highs and we need to see lower lows. So if this week we don't print a higher high and it's an inside bar, on the next candle, we have to crack that low for it to be a corrective wave. I am not going to do anything beyond that. I think I laid the case out very clear. And if you want a little bit more context, we went through a lot of this on our Friday stream. If not, I thank you so much for watching. And I would really appreciate if you could consider smashing that thumbs up and subscribing to the channel. Thank you so much ahead of time. I look forward to seeing you in the next one. Thanks again.